And welcome to this week's look at the major news stories affecting the market so far. And what are we going to look at? Well, we're going to take a look at the euro against the dollar. It's gone through a key support level. Secondly, we're going to take a look at the Wednesday evening UK time and what the NASDAQ 100 or US Tech 100 Mini at FXOpen was up to before the NVIDIA report. Thirdly, we will take a look at that report and take a look at the results. How did they fare and what happened to the share price and the NASDAQ 100 after that. And finally, we'll take a look at the charts for gold and oil and have a look at some technical analysis on what may be happening moving forwards there. So, to start, the euro against the US dollar falls below the key 1.11 support level. Now, earlier this week on the website, we discussed the potential for a pullback after the rally to 1.12, and we noted a couple of things there, and that being the fluctuation since April had formed an ascending channel, that's shown in blue, with the support points marked by circles that you can see there, and the price was near the upper boundary of the channel where resistance was pretty likely. Now the 1.12 level also showed signs of resistance. The price briefly exceeded it before quickly falling back below that level, and we also saw signs of bearish divergence on the RSI. Now 3 days later, the bearish signals continue to develop, leading to the formation of a bearish head and shoulders pattern that you can see. A greater than 1% decline in the price, breaking below that 1.11 level, which had been support since about the 21st of August. So could the price continue to decline? Well, let's have a look at what the chart is showing us or indicating to us. The RSI exited the overbought zone and has fallen below the 50 line, approaching the oversold zone, which is a possible sign of changing market sentiment. The price has broken through the trend line, which is in orange. Now, Thursday's decline in the euro against dollar was also influenced by news of weakening inflation in Germany and Spain, and that could well prompt the ECB into action over its monetary policy, i.e. potentially a rate cut. So that's all coming into play as well. Now, if this is a correction after the significant A to B rally of 3.8% since the beginning of the month, the target could be around the 1.1045 level. Now, that acted as resistance in mid-August, and also coincides with the 0.618 Fibonacci retracement level. That's drawn between points A and B that you can see, and the target for a decline based on the height of the head and shoulders pattern. So looking like that could be quite a key level. However, of course, it is possible bulls may regain some control sooner and attempt to push back into the 1.110 to 1.12 range. We are anticipating a little bit of volatility, so don't forget your risk management techniques. Okay, so we're going to go back to sort of Wednesday afternoon, Wednesday evening now. And the NASDAQ 100 or US Tech Mini 100 at FXOpen was consolidating ahead of the NVIDIA report. So we wrote after the main session, NVIDIA was due to report its second quarter earnings, and it was reasonable to assume that market participants were anticipating the report, which may well trigger some market volatility. The NVIDIA share price had begun fluctuating within the 123.50 to $131 per share range since the 19th of August. Signs of anticipation were also evident on the chart of the US Tech 100 Mini. Starting from a 3-month low formed on the 5th of August, the recovery has created an ascending channel, which you can see in blue, with the price in the upper half indicating steady demand. However, as the report approached, the price retreated from that upper boundary and dropped towards the median line. That's indicated by the red lines that you can see. And this could suggest a bullish flag pattern. A concerning factor is the growth rate slowed after the 1st of August high, which the psychological level of 20,000 could come into play and also act as a barrier to further growth within that blue channel. So slowing growth and potential barriers to further growth can be seen. Now, in the event of a strong report, the US Tech 100 Mini price could break out of the bullish flag pattern and continue its upward movement within the ascending channel. However, if the company's results disappoint, the price could drop to the lower boundary of the channel or even attempt a bearish breakout. So everybody was taking a bit of a pause prior to the market, and we know how important NVIDIA has become over the last couple of years. We seem to talk about it regularly. So the market was definitely consolidating slightly Wednesday before that report. Okay, thirdly, what happened with the NVIDIA earnings report? Well, the shares fell despite strong earnings. So earnings per share came in actual at $0.67 or 67 cents per share against an expectation of 0.647 per share. Revenue came in at $30.4 billion against an expectation of $28.737 billion. And the company also announced a $50 billion share buyback. So overall, pretty positive figures, above expectations, and the share buyback scheme. However, despite these strong results, the share price did actually fall. Wednesday it closed above $125 per share. Pre-market Thursday, they're trading below $118 per share. So quite a significant drop. In fact, 6% or greater than 6%. Now that may be due to the company's future outlook not quite meeting investor expectations, and also maybe some waning bullish sentiment around AI adoption. So whilst the results were good, not the response the market was hoping for. On the 12th of August, we noted that the price was forming an ascending channel, which you can see in blue, and the $100 per share level was acting as support. Now, assuming that bearish momentum reaction continues at the open, we could see the share price start off around the $115 per share mark today, which is close to the lower boundary that you can see. Now, the new data has given us a few more indications, and after retreating from $130 per share resistance level, the price is likely to form a broad bearish gap around that $120 per share level, which could then act in the future as some quite significant resistance. The median line may also act as resistance, increasing the likelihood of a bearish breakout below that lower boundary that you can see. So, good figures, not a great reaction. Chart not giving the best of reactions. However, analysts remain optimistic. Tip rank survey that we like to refer to now and again, 33 of the 36 analysts spoken to recommended a buy for NVIDIA shares, whilst the average price target is $150 per share over the next 12 months. So they remain slightly more optimistic than perhaps the initial reaction. But obviously worth noting, those targets could be revised down if the bearish sentiment continues. Well, the NASDAQ 100 Thursday morning is also around the 19,408 level, which means it dropped further after Wednesday, and the reaction to the NVIDIA report looks likely to affect the index itself as well. So we are expecting a little bit of volatility. Don't forget your risk management techniques, stop losses, etc. Okay, we're going to finish this week by taking a look at the charts and a little bit of TA for the gold and oil prices. Obviously, two of the most widely traded commodities in the world, and the charts are signalling some more upside. So let's start with gold. On the hourly chart at FXOpen, the price formed a base near the $2,470 zone, and the price started a steady increase from here, moving above $2,490 per troy ounce and $2,500 resistance levels. It was a decent move above the 50-hour SMA and the $2,515 mark. Bears started to appear near the $2,525 mark, the high forming at $2,526, with the price now consolidating some gains. And the price did dip a few points below the 23.6% fib retracement of the upward move from $2,470 swing low to the $2,526 high. The RSI is now below the 50 mark. If we see a downside break and below $2,505, then we'd be looking for support around 2,490 or the 61.8 Fibonacci retracement level. Next major support to be found after that would be the 2,470 mark. So these are some key areas to keep your eyes on. On the other side, immediate resistance near the $2,518 mark, then $2,525. If we go past that, we'd be looking at a target around the $2,540 per troy ounce. That's gold. What about oil? Again, just a quick little view of the chart on here. The hourly WTI crude oil chart. The price started a major upward trend from $71.35 per barrel. The bulls pushed the price above the $75 and the $75.80 resistance levels, with a high around $77.18 per barrel. Then started a downside correction below the 50-hour SMA. Now also a break below the key bullish trend line with support at $75.80. Immediate support on the downside would then be near $75, with the next support at $74.25 or the 50% Fibonacci retracement. Below there, the price could well test the $73.60 zone. If the downside break does happen further, we could see $72.70, and after that all the way down to $71.35. On the flip side, if the price increases, we're going to see some resistance around $75.80, then $77.20, then a move potentially up to $78.80. As we know, both gold and oil are impacted by geopolitical factors across the world. So as ever, keep your eyes and your ears open to all the news you can. Don't forget your risk management techniques. And of course, we wish you luck with your trading in the week ahead. Bye for now.